Welcome to the Financial Advisors Want to Know podcast. This is Catherine Tindall, CPA. We're doing a special episode today. As you might be aware, usually I have an expert guest on the show that talks about their specific area of expertise. And today's episode is special because the expert I'm inviting onto the show is myself. I get a lot of questions from advisors about how our firm works for them, specifically around the tax work. So I wanted to take an episode to just talk briefly about how Dominion works with advisors, my philosophy around tax strategy work for advisors, and a little bit of that. So let's just dive right into it. A little bit about my background as a tax professional. So I've spent basically my whole career in tax world. I'm a CPA, so my specialty has been on the accounting side. And something I noticed when I was working at other firms is that a lot of the time it was the work that would happen for clients was really based on the end game of just getting the compliance work done. And for a lot of clients that don't have the opportunity to do a lot of planning, say your normal W-2 kind of employees, that makes sense, right? That's the primary need that they have. But I noticed over time that for a lot of the clients that I was seeing in these other firms, they had much more specific planning needs. And we would get into so many situations where I would go to do the tax return. I would see, oh, they should have done this way. It would have saved them 20 grand, 40 grand, whatever it was. Or, oh, did they even think about doing this retirement plan contribution? Or, oh, we should have changed how they did their compensation to themselves. And there were a lot of those kinds of moments. And I noticed that the core problem that was happening was that the way that the services were structured for the clients didn't align with the deepest needs of what the clients actually had. And that with leading with a compliance focus initially really robs the opportunity of being able to change the outcomes that the clients were having. Because once it gets to the end of the year and we're just putting stuff onto a tax return, that's stale information, right? I always joke with people on midnight of the 12/31 at midnight, your tax situation goes from being a carriage to being a pumpkin. You've now gone through the tax funnel. And when it comes to planning, there's not a ton of stuff that we can do retroactively. That's especially true for professional services companies, just because the way you earn your income, the way that you get deductions, we play the tax game on a year-to-year game. And so it can be really hard to do tax planning retroactively. The other thing I was noticing too, especially in the advisor clients, is that practices can grow really significantly year over year. And just using what happened last year as a basis for how you're doing your estimated payments or your tax planning is not good enough, because you're experiencing so much change that just filing your estimated income tax payments with a protective estimate, that's 110% of last year, isn't representative of what you're actually doing. And I also found for a lot of these advisor practices, they're so dynamic and they have a lot of things going on that just making quarterly estimated payments and assuming that's the norm without discussing it often isn't the best way to serve them, just because that money gets lockboxed over at the IRS. So my emphasis when starting Dominion was we had a planning focus, and our focus was really changing around the service model so that we're leading with planning, and that the tax returns that get filed at the end of the year are really a premeditated result of the planning that we did during the year. Because I found for a lot of people running their businesses that the income tax liability is this boogeyman that's hiding under the bed. They don't know what that number is. They don't know what it's going to be. It just kind of creates low-level anxiety. But that's a known number, right? If we know what your profits are, we know roughly where that tax liability is. It's just a matter of doing projections and then making decisions around, are we happy with the boogeyman under the bed? Is he big? Do we need to tackle him? Or are we what are we going to make for changes in this situation? Or are we going to leave it and we're happy with it, depending on what we're trying to do in the business? So really, our process as a CPA firm is engineered almost like financial advisors rather than mimicking other CPA firms that I had worked for in the past. And so the general process that we take advisors through is I start off with an assessment engagement, which is like the one-page financial plan. We take a look under the hood. We have a long conversation about your goals and what you're trying to drive the practice towards, because I'm always trying to optimize for the growth of the asset that's the firm, not running out of cash and not driving you crazy. And so I need to know our end game of where we're driving towards. And then we take a look at everything internally of what could you be doing to get a better outcome from your tax situation. and then just understanding it, right? Because I think half of the challenge for a lot of advisors is just understanding, okay, this is what I'm facing for, what payments I expect that I'm going to need to make, and how am I going to make them, and when am I going to make them, and is it better for me to put some money in a retirement account? Is it better for me to make that investment into that marketing program? A lot of it is just getting the knowledge so that you can make the decisions. And a lot of that comes down to doing proactive forecasting. So we start with an assessment engagement to decide, what are the things you should be implementing right now? What should be on your radar? I also take a look at the record keeping practices within the firm, because I can't tax plan on spaghetti and you can't run a growing practice on spaghetti either. If you don't have a way to assess your profitability and financial metrics to help you make the right decisions, we're not going to get anywhere. So I always look at the record keeping first, then we look at the tax planning opportunities, and I come up with a 1 to 2 page presentation of all of my findings and recommendations. If there's outside vendors you need, if there's pieces that you can execute now, if there's pieces that you would need to engage a firm to execute, et cetera. We go through all of that. And then we shift into the next phase of the engagement, if that makes sense. Most of the time, if people aren't ready to fully engage with us, at least that 1 page plan can help them avoid tax waste. So sometimes I have advisors where we're not going to be a good fit for regular ongoing services, but they don't want to get into a position where they've spent multiple years wasting tax in inefficient entity structures or things like that. And so we do the assessment to find the break-even points of, hey, once you hit this threshold, you should be an S corp, or hey, once you hit this threshold, we need to recalculate these pieces that you're doing because you're going to be verging into tax waste. So a lot of the time, the assessment can be for that process as well. But for regular firms, it's here's the basic roadmap we're going to take. And then from there, we do an initial planning engagement, which is based on the findings that we have from the assessment of things that I think are important. Something that we differentiate ourselves with as a firm is I don't do any hourly billing. So I'm not looking for more work. I'm not looking for, the multiplication of the entity filings or the multiplications of the paperwork. I'm looking to find the most efficient way to get you into a holistic situation where the tax piece is not something that's causing you low-level anxiety all of the time, that there's no boogeyman under the bed. You know what's going on with it. We have a plan for how it's going to be dealt with. And we also have a plan for strategically trying to reduce it in a way that's aligned with the goals of what you're trying to drive towards. And so in the planning engagement, after we do the assessment, it's any of the implementations that our team needs to do, like entity restructuring or allocation calculations, or say you're going to do a cost segregation study on a building you own. Those kinds of implementations, we treat the initial planning engagement as, if you had been working with us this whole time, what would get you up to speed to being tax optimized today? And it's all of those pieces go into that initial implementation. And then from there, we typically switch into a subscription model of the firm, which is based solely on what we find in the assessment. How often do you need to be talking with us? How complex are your filing needs? How dynamic is the business right now? How many pieces are we going to have to be executing versus maybe you have internal team members that are executing things? How much hand-holding are we going to have in the reporting process? Because, for instance, our firm doesn't currently do bookkeeping or fractional CFO work. We have recommendations for those depending on what's going on in the firm, but just what level of collaboration are we going to have? And so those subscriptions are based on those factors. And usually our goal is that we're generating enough tax savings to pay for our fees out of the planning work that we're able to execute for you. Because I always tell people, they say, oh, I paid my tax professional X thousand last year. And it's like, well, actually, you pay them X thousand for them to do the paperwork, but you also paid them for tax waste that they didn't help you prevent. And not only do you pay them for the tax waste, but you pay them for the opportunity cost of that tax waste. So I have a good example here where I had a client in a couple of months ago where he had been paying his tax professional a couple $1,000s a year to do his returns. But when I went back and looked at it, there were a lot of big pieces that the tax professional had missed because they didn't specialize in advisors. They didn't understand statutory W-2. Bunch of pieces were going wrong. And so when I went and did the recalculations, this advisor had wasted over $100,000 in tax over the course of 3 years, just because the tax professional wasn't really planning. They were totally compliant. The returns were correct, but they weren't planning. And so the advisor really paid that tax professional their fee, the $100,000 of tax waste, and what that $100,000 could have done in that advisor's business in terms of return generated, right? What he could have expected for, growth of the multiple of his practice had that $100,000 been invested in the practice rather than mailed off to Uncle Sam. So that's what he actually paid for tax work. And I think for a lot of advisors, that's a really common scenario, not to that extent all the time, but that's a common scenario I come across is they don't realize that they're actually paying a lot more for tax advice than they think they are because it's the tax waste that they're paying. And so we really try to optimize the relationship for trying to reduce that tax waste in ways that are efficient for what you're trying to do with your business, right? Because I'm not going to tell you, hey, let's go chase these tax savings pennies when that time you could have spent doing prospecting or being in front of clients where that's going to give you a better return. So that's always part of, we're always trying to optimize for the growth of the value of the practice. And we do that through, once we do those initial planning engagements, we have that monthly subscription to the firm, which is access to us to be able to have regular planning meetings and have these discussions around what you're trying to drive towards so that we can holistically align what we're recommending on the tax side so that it's really helping you optimize the growth of your practice. Sometimes the advice is pay the tax, but a lot of times there's maneuvers and pieces that we can do between how your entity works, how you pay yourself, different credit programs, how you're doing your retirement contributions, how you're doing compensation, how you're deducting expenses, how you're structuring different transactions that we can save a lot of tax waste, but at the same time, optimizing for what's going to actually help you grow. So that's the kind of work that we do for advisors. And then on top of that, once we go through the planning season over the course of the year and proactively planning for, okay, this is what your liability is going to be at the end of the year. Do we want to do anything about this? Are we happy with this? Do you want to do quarterly estimated payments? Do you want to just keep this money on the side and then we pay it in at the end of the year? How do we want to pay this? We figure out all of those pieces. And then once we get to the end of the year, the filing of the return is the scorecard of the game we played, rather than the first time you're figuring out what you owe for a tax liability, which is how a lot of tax professionals do it. And so the filings at the end of the year are much smoother because we've already prepared for it. You already know what the tax balance is going to be. And so there's not the stress of, okay, well, what kind of check am I going to cut? And am I going to have the funds for this, et cetera? We already know what we're walking into, and we've already planned for it, and we already have it, set aside and decided what we're going to do with it. So that's the way that our firm is structured. And our niche is specifically with financial advisors because I create teachings, we create tools, we have special programs that are going to be coming up. And so we like to really lean into you guys as a niche because you have really specialty issues with the way you earn your revenue, with the way that you deal with the different vendors and platforms that you work on, the regulations that you have to deal with, the compliance that you have to deal with, that the tax piece kind of has to integrate with all of that efficiently. And on top of that, you grow so dynamically. And the tax trainings and the teachings and the education and pieces that we do are all things that you can deploy in your own practice too. And so we really enjoy as a team being able to not only increase the value that you get out of your own tax planning, but then you're able to flow that into your team and into your client relationships as well. So that's the basics of what we do as a team. If you're interested in doing an assessment, please find me on, come visit my LinkedIn page, send me a DM. I'm happy to talk to you more about what that looks like. We usually start with a 15-minute intro call where I just get to know your practice, see if I'm even going to be helpful or useful for you, see if it's going to be a value add for you or not, or I can point you in the direction of other resources and things that we've built or other professionals that I think will be able to help you. And then by getting that assessment, even if you're not changing who your tax preparer is, just having a second set of eyes look under the hood and see, are they doing everything right? Especially if they don't specialize in you, it's very easy for them to not understand some of the nuance of how you're doing things and miss pieces that can end up causing you a lot of tax waste. So this was my special episode of the Financial Advisors Want to Know show, just talking about Dominion and the work that I do. If you're interested in learning more, like I said, message me on LinkedIn. I'm happy to talk to you about that assessment. I also have a number of resources, guides, tools, webinars, etc. So once we start that conversation, I can send you over things that I think will be helpful for your particular situation, whether you're an RIA, independent broker dealer, if you're just a 1099, or even if you're a W-2 and you're looking to break out and start your own practice. We have resources for all of those different pieces. So thanks again for listening, interested in getting your feedback, and looking forward to having you join us on another episode of the Financial Advisors Want to Know podcast.